Hey everyone, I have a really cool interview with Gary Yeoman from Voxtur Analytics today. So please sit back and enjoy this. And the next video that I put out will be an analysis of the company with evaluation as well. So stay tuned for that one. Here's the interview with Gary. Sit back and enjoy. Maybe you could explain to everybody first, and me, is exactly what you do day to day in the business, and like how would you explain your own role in the company?
Sure. Well, I think it's important if I go back a little bit in time because I've had deep roots in the real estate industry for many, many years. And so I think fairly, my first most significant opportunity was I was head of real estate for an auto parts manufacturing firm called Magna International. They're now the largest in the world. But back then they were a smaller company and I oversaw all the real estate. So all the buying, the selling, the leasing, and candidly, over my 10 years, I built over 40 million square feet for Magna in many, many countries and developed thousands of acres of land. So I have a fairly robust background in all aspects of real estate, from construction to buying to selling to land development, etc. I left Magna and I started a little business out of my house, and ultimately it became the Altus Group. And when I left, had 4,500 people in 62 countries, and it achieved, a maximum value of about $4 billion. So we had some success. And so when I was in Altus, I happened to buy a construction business, in Australia that covered Australia and Asia combined. So we were in the Philippines, we are in India, we were in, you know, um, just many of the countries all in through Australia, Asia. And so that allowed me to have a little bit of introduction to not only your country, but many others around it.
Cool.
Then subsequent to Altus, I did something like you in that I started my own little private bank, where I went out and invested in companies and provided loans to companies and that type of thing. But it didn't really kind of get my juices going.
Okay.
So there's this little company called Lookabout a number of years ago, probably almost, I don't know, 8 or 9 years ago. And they came to me and they wanted me to come and work for them. And I, wasn't ready to do that. So I, basically agreed to sit on the board. I sat on the board for a few years, and then basically saw that they were spinning their wheels. And so we had an opportunity here to, in my view, I thought we could make something of this company, but there had to be a radical paradigm shift from what they were doing versus what I saw in the company. So I went back to the group and said, you've asked me to participate. I will. I'm prepared to put my own money into this, but we're going to have to do some material changes. And so they agreed to that. I put a few $1 million of my own money into this, and fast forward, what you had was a little company that was worth probably about $4 million. Back then is now primarily focused in North America. And during the height of the marketplace, we were at $800 million market cap. And quite frankly, because of these higher interest rates, because of a different outlook on technology stocks, combination of a whole bunch of things, we our value has since significantly decreased, but not unlike quite frankly, when we compare ourselves to other technology companies that are in our sector, aka companies like Blend, Doma, Real Matters, that are all kind of technology, real estate technology companies. We have actually accelerated since we kind of did this Voxtur merger together back in 2021. But we've doubled our share price, and that's at where we are right now, which is at the lowest. And we've increased our market cap from, I guess it was around $12 million to today we're around, I guess, about 170, $180 million Canadian. And that's kind of comparing us at our lowest point, since we did our material merger to become Voxtur. So that's a little bit about my background, what I do with the company now. I originally was CEO, And then when we did our merger with A-Law, we agreed that Jim would take over as the CEO. I would accelerate myself to executive chair. The duties there are mergers and acquisitions, banking relationships, um, essentially capital markets, and as I said, M&A. So capital markets, banking, M&A, and then any major decision that's made in the company, Jim has to collaborate with me in order for us to be able to go forward. So it's oversight, but as I say, when I'm dealing with the capital markets and the banks and the M&A, it's kind of taking care of that other side where Jim is allowed to focus on the day-to-day operations of running the business.
If you were to value the business, not what the market thinks of the business, how would
Yeah.
you look at the valuation?
Well, there's a distinct difference what's happening now, but right now, I mean, if you're a pure technology play, 12 months ago, you could get 25 times revenue,
Yeah.
quite frankly, and now today is more like 5 times revenue. So if we did 5 times revenue on a kind of a 12-month go forward basis, that would put we're about put us at a market value of somewhere around $1 billion, 900 to $1 billion as far as what we're going to do over the next 12 months. So I would say, on that basis, we're significantly undervalued. Another mode of comparison is that there's some debt that is owed from the law firm, which was A-Law, and is referred to in the last financial statements as intercompany related debt. So we're going to try and clear that off this quarter. The law firm owns a bunch of shares, and we're going to, they're going to just kind of try to do their best to clean up that debt completely. But what the audit company, our audit firm, did is they asked us to defer some of that revenue from the third quarter into the fourth quarter. So we kind of took a $3 million hit. But if not, I'll just share the following. In the marketplace today, not specifically Voxtur, but in the marketplace, title, and title, insurance, title reports was down by almost 80%.
Okay.
In the origination space, valuation was down by 60%,
Wow.
and so the whole industry was down quite a bit.
Mm.
And so when I compared ourselves to, Voxtur, or sorry, to Real Matters and to Doma and Blend, their values, basically, have fallen by that much.
Yep.
So they've, they were originally at, Blend was at $4 billion, and now it's something like 350 million. Doma was valued at around $2.8 billion, and now it's about 150 million. Real Matters, so and a couple of years ago was $3 billion, and now it's at 375. So they've averaged by falling over 95%. During that same time period, we've increased our share price by double. But most importantly, if we did not have to take that $3 million deferral, it's not a write down. Here's what happened to us in the light of that whole market pressure, and because of originations being down, because of interest rates spiking, we would have increased our revenue by 3%. We cut our cost of goods sold by 20%. We increased our margins by 20%. We would have been slightly EBITDA positive, only 100,000, but EBITDA positive, and cash flow neutral. So massive quarter for us. When we compare to all of our peers, which I told you, where quarter over quarter, they fell by as much as 50%, in their revenue. And some of them had large impairments. So we thought that we just did excellent for some reason. And then on top of that, we announced we completed this real estate platform called Blue Water. And so we're totally excited about that because a lot of the space that they play in are what we call the secondary markets. So they have a trading platform that do mortgage servicing rights, whole loans, non-qualified mortgages. They do excess trades. So they created this whole marketplace or platform where they can, basically take these bundled large packages, of servicing rights or loans, etc., and they can price them, they hedge them, they facilitate a trade, and they will indirectly participate in the brokerage piece, of that transaction. So what I liked about it is that number one, it's moved away from origination into the secondary market. Um, Banks need liquidity, especially in times like this. So servicing rights are still a hot commodity. And every deal that takes place, let's say you're selling or we facilitated a trade of 20,000 mortgages. Well, the purchaser needs authentication that the values that are purported on the each individual property are consistent with the values today. They want to know that there's clear title to those properties. They want to know that the tax certificates or taxes are paid up to date, and same with flood certificates. So what do? We're fully digitized in all of those venues, and so the synergistic opportunities for us to be able to participate, not only owning the platform that is fully digitized, but also to be able to have synergistic ancillary revenue opportunities that are digitized as well. So all of this we can, complete same day. So, a massive uptick for us. So we're pretty excited what Blue Water is going to do because it creates an environment where you have anti-cyclicality. But our whole mantra is making homeownership more affordable. All right. And so with that, if you look under the tenets of what we do as a business, we now offer attorney opinion letter instead of the pure title. So it's
Yep.
giving you the same insurance coverage, but in the U.S., typical title insurance is between $2,500 and $3,000. We're offering the same package for $700 to $800, depending. With our valuation platform, because we own and have the most intense comprehensive real estate data platform in North America. We can take fully digitized appraisal reports, all their assessment, appraisal records, sheets, whatever you have, populate them with our data and provide them to the appraisers so that what they're able to do is take digitization with data included, so house sizes, room sizes, lot sizes, descriptions. We can provide the comparables and sales, and even give them an opinion of value, so that we can fast track that whole valuation process instead of doing it taking $1,000 in 20 days to complete appraisal. We could probably do it in 3 days for, I don't know, $200 to $300. So, again, making homeownership more affordable. Just so you know, under the attorney opinion letter, we have been sanctioned now, approved by Fannie Mae, by Freddie Mac, by the Federal Financing Housing Authority, as well as the VA. So pretty much every GSE, government services entity, in the United States have approved our product. The insurance is even more robust than what is given right now by the other insurance providers. And so we're a real and viable concern to the existing title insurance providers because we're providing an alternative to what they're doing right now.
When was the last time you made like a real mistake, like a tangible mistake, whether it was in this business or a previous business? Can you remember like one of the deals that really just didn't work?
Yeah, I mean, listen, nobody, the best baseball player in the world only bats 333, right? So, anyone that says that, they're perfect in their execution, I think would be embellishing. But fortunately for me, some of the mistakes that we made were not significant. The acquisitions that we have right now, we feel real strong about every acquisition that we've done within the Voxtur family. When I was at Altus, I did buy a small little business, and it was a couple $1 million, so it wasn't significant. But kind of within the first couple months of closing the deal, the head guy left,
Okay.
and so it posed a bit of a problem for us. Even our business that we bought in Australia was a bit of a challenge, so it probably took us probably 3 years to kind of get it back and get it healthy and get it going. But the key is, and I will say this to everybody, not every deal that you do, you have instant gratification. All right. I think it takes some time to adjust to culture. It takes some time to, allow for proper integration. It takes some time to be able to figure out existing clients that you have and how you can cross sell, how you can, make 1 and 1 equals 3 as far as your products offerings. So, my whole thesis is that, I mean, we have to have 4 tenets before we buy a business. It has to be real estate. It has to be a technology play.
Mhm.
It has to be accretive. And when I say accretive, at the time that we buy it, and it has to have synergistic capabilities, so we can cross sell those to each of our other business units. If it has all 4, then I feel comfortable that I can take it to to our special. We always have special committees in our board of directors to oversee acquisitions. So it's not like I'm really, really happy. I like it. We're going to buy it. No, what it's got to do is it's got to go through the executive team, got to pass, mustard with me. Then it goes to the special purpose, board of directors who, we can't have all the board involved. So what they do is we usually take 3 people for every acquisition from the board to kind of go through, that third level of scrutiny. And then once it's through the third level, then it goes to our board of directors. And once it's kind of past that point in time, depending upon what we need, do we have enough cash in hand, or do I have to raise some money? Do we have to do a private placement? Are we going to consider debt? Do we bring the bank in involved? So we go through a fairly rigorous test. So in no means am I going to purport to you that we're perfect in any way, shape, or form, but I really, really like what we've done. Like when you think about it, it's making home ownership more affordable. Who doesn't want that? We worked with the Obama administration. We worked with the Trump administration. We worked with, the Biden administration. Every one of them wants homeownership more affordable.
Yeah.
Everybody wants to be able to have their people in their country. Um, um, Sorry, I just had a call in there. My apologies.
That's
Everyone wants people in their country to have the ability to buy a home. Everyone wants them to have an ability to have it affordable, right? And so what we're doing is displacing what was typically manual labor, manual, data and analytics, and replace that with digitization. So that's what we've done. So
yeah.
we think to buy a house today, we can save, $1,700 for title insurance. We can save, $800 for an appraisal. We can, from a tax standpoint, we provide opportunities to review whether the taxes are fair or not fair. So when we start, adding up these opportunities, it does make home ownership more affordable. And so we're kind of making everyone happy. Other than the people that have done the same business the same way for the last 25 years, and still, I mean, it's akin to, there used to be really good businesses called that check writing businesses.
Yeah.
Not so popular anymore. I know the last time is that you wrote a check, but I would suspect that their business has been hurt significantly because it's been displaced by technology. It's called online banking, and all of the things that go with that. And so, quite frankly, we're just like every other technology. We are a disruptor. But if it's not answering the bell as far as what the clients need, then it's not going to happen. And as you can imagine, nobody works slower than a bank. They're cautious, they're methodical, they're extremely diligent in everything that they do. And so, it's been somewhat challenging for us because it doesn't move as quick as what we want. But some of the businesses that we bought, like for example, Clarosity was a business that we bought, and it wasn't making money. But what it did have was 150 master service agreements. And a master service agreement means that we're approved both from a technology standpoint and a financial standpoint to do business with that bank. And now that takes up to 18 months to get that approval. So I paid at the time the equivalent of $12 million dollars to have access to the master service agreement and to have access to the technology platforms that were there. We've effectively displaced all of the people that were working there, and we kept the technology and we have the master service agreement. So we're quite happy with that. So, a lot depends on, how you look at things, but each business has a story to tell. Each business has a purpose, and is part of the puzzle. So what we've done is kind of digitize the whole, making home ownership more affordable. And, we're quite happy with the way, things have moved forward.
I see
Although we're
that.
not happy today with how our businesses are valued, but listen, uh, it's a moment in time.
Yeah.
Wasn't that long ago, less than 12 months ago, we were $1.50, and quite frankly, we're such a better company today in so many ways. We didn't have blue water, we didn't have that whole marketplace that we built, the whole trading platform. We didn't, we didn't have hedging capabilities. We weren't able to bundle these more packages and take every one of the businesses that we have and utilize that in helping that business get better. So we have so many more assets today that each business is profitable right now. And it took us a while to kind of get all those pieces together. I think that we had embraced an austerity program where we cut off, as evidenced earlier, our cost of goods sold dropped by 20%.
Mhm.
So we do know that regardless of how well you think you're doing, we still have to survive as a business, right? So we're kind of doing the right things. I would love to have 50 million of cash in the bank,
Sure.
because we're sitting here today. I think third quarter said we were around 12 million or something like that, where some of our peer companies, went public at large volumes, like, the 4 billion, the 3 billion, the 1.5 billion. And so some of them put as much as 400 or 500 million of cash in the bank.
Yeah.
Now they're pissing that away
Yeah.
like you would not believe, where we haven't had that luxury. Remember, I started this little company off when it was $4 million. So quite a change.
So, what are your personal goals with the business?
Well, I mean, my personal goals always, focuses on the shareholder, right? I mean, if I go to you and I accept your money, as an investment, then I got a responsibility to you to give you that kind of return. And so, what I've done to make sure that I'm aligned is I have a few $1 million of my own money into this.
Yeah.
So I try and align myself, with the shareholders and make sure that we're doing the right thing. The second thing is that, I've been around a long time. Have a wonderful relationship with the Bank of Montreal. Borrowed some money from the bank. I think our total debt right now is $60+ million with the bank. And
Cool.
so my relation, I made a lot of money for the Bank of Montreal, and I'm not interested in losing any money for anybody, whether it's a bank or whether it's a shareholder. So I can't really rest and relax until I know that we've gotten to that point where it's print money for us and that shareholders are happy and the bank's happy. So that's kind of my biggest, goal. And, when you go through periods like we're going through right now, of course, a lot of the shareholders could have sold $1.50 and they didn't. So, you can never make everyone happy all of the time. But the key is that, are we a better company today than we ever been? Look at our third quarter results compared to them. If not for writing down that 3 million, we had knocked it out of the park, right? So, I'm really happy that we're making progress. So if I keep those things in the back of my mind, then I'm and we're continuing to perform as a company, then I'm reasonably satisfied.
Awesome. Let's imagine it's 10 years' time and the business didn't exist anymore. What do you think could have gone wrong?
Well, probably I won't be here in 10 years' time. I mean, I'm 68 years old right now.
Mhm.
I don't want to retire. I actually signed a long-term contract that takes me to 75.
Cool.
But I mean, listen, let me put this in a context. When should you be making the most impactful changes in a company? And I will tell you, not when you're at the bottom. I will tell you it's when you're at the top, because you can't rest on your laurels. And most companies have this, this incredible, I've made it and I can relax. I can, put my feet up and just watch this print money, and that's good. And that is the time when you should be reinvesting in your business, looking to the future. And the whole. I mean, listen, we're a hockey country. You're not, but we have a hockey player in Canada. His name was Wayne Gretzky. Most people have heard him in the world, but his dad always taught him, you always go where the puck is going to end up, not where it is right now. And business is very much the same. You have to look at your long-term plan, your long-term goals, and look where you think it's going to be. So if it falls apart, it'll be because the same problem that people didn't move into technology today and resting on their laurels. So, if we don't continue to improve on technology, improving on technology means also that you have to have an adequate database, right? Because if you have just pure technology without the fuel to keep to do something with that technology, you're going to fail. So we have access to all CoreLogic's data through a business that we bought, and they were empowered to have access and right to that in perpetuity. So we've basically taken that along with First Americans data, along with some MLS data from Mr. Cooper, and we've really put ourselves in a very good position where our data is second to none. And then when you intertwine that with good technology, then we got to wait for the future. So I think what we're doing right now is going to propel us for the next 5 years in an upward curve, just with what we're doing. But once we get there, then I'm sure that there's going to be other dynamics. Whether it's going to be there's going to be a whole bunch of changes and improvements with geospatial information, whether it's drones or whether it's satellite imagery, and the things that you can do as far as having access to sizes and shapes of lots and buildings, and whether they're 2 story, 3 stories, and all the technology you can use for floor plan layouts. All of this stuff is going to take a fairly significant step going forward. We think that we are positioned to participate in all of that. We have the largest technology-based sketch platform in North America, and it's all done digitized. So when a property assessor, you guys pay property tax in Australia, but he can take an iPad out with him now using our technology, and with a finger draw a sketch, and it can be calculated and valued right on the spot. So what they do in most countries is they have a clipboard, they have a piece of paper, they go out and draw the sketch. They measure it with a tape and a pen, and write the measurements. Go back to the office, calculate the square footage, write up the description, and find out that the building doesn't balance. Got to go back out the second time. And so what we're doing is effectively 20 a day, where that guy, done the old way would be three a day. So we've made some significant strides to prepare for that whole geotechnical, geospatial side of the business as well.
What type of car do you have? I know this is a very personal question, but I'm always interested to know what type of car people are driving.
Well, so I'm not 21. So I've worked hard in my life, and so I've had some success. At my house in Naples, Florida, we have a Range Rover.
Yep. Okay.
And my house here, we have a Mercedes SUV,
Mhm.
and I have a toy. It's called the 911 Porsche Turbo. That's my foray into vehicles.
Cool. Okay.
And it's kind of funny once, because when I was younger, and I was starting my business, and I'll be interested in your take on this, because I can remember it like it was yesterday. And I landed a very significant client, that multi-billionaire today, and I picked him up because we're going to go through some of his sites, development sites, because I was doing some work for him. And I picked him up, and I was younger, probably in my early 30s, and he hopped in, and I had a Pontiac, whatever, Laurentian, or I don't forget what the make and model was. And he got in the car. He started pulling on the inside, pulling on the outside. He says, "What the hell is this?" He says, "This is cheap." I said, "Well, what do you want me to do? Drive up to your office in a Mercedes?" And you know what he said to me? He said, "Yes." He says, "I want people that are successful. I want people that are good at what they do. And if they're good at what they do and they're successful at what they do, it means that their clients are happy. And if the clients are happy, it means you're happy. And so you should not feel, embarrassed to drive what you can afford to drive, because it means that you're successful. Don't be shy. Don't feel that you should be humbled by what you're doing. You earned it." And so it really had a profound effect on me. I was probably a slow learner, because I wasn't quite still ready, because you know I guess it's all in the eyes of the beholder, isn't it? So, but at this stage of my life, I feel very comfortable, because I have a large family. I have 5 children. I have 13 grandchildren. I have a very
Congratulations.
good, full, wonderful life. And as long as I'm good to people along the way, conscientious, live a clean life, try and be as good a person as you can, then, good for you if you can, have the car that you like to drive. And to some people, like a Warren Buffett, it doesn't matter, right? It
Yeah.
does not matter. And so it really gets down to who you are as a person, and more importantly, who you're investing in. Are you satisfied that they're smart, that they're intelligent, they have moral obligations, they have fundamental obligations to represent you and care about you as a shareholder? And if all of those come into play, then not a lot of other things should really matter too much. I a lot of money before I got into Voxtur, and I put a lot of my money that I earned after tax money in to get Voxtur to where it is today. Had a lot of help along the way, a lot of help with some really strong institutions, with some really good retail investors, and with the help of the Bank of Montreal, who've just been outstanding to us. So really, really happy about that.
Yeah, it's awesome that you have a good relationship with the bank. I think that's really important, actually. A lot of people undersell that the ability for the bank to help them when they need it and things like that. I think that's actually an important advantage that you have. It's good to know that, actually.
Not too many companies our size. In fact, probably none that have a Class A bank that's sitting there backing them every step of the way. It just doesn't exist. Yeah.
Yeah, that's why I
So
was.
sorry.
That's why I thought it was. I'm glad you brought that up. It's something I didn't know, and most people wouldn't know, and I think that's a good little yeah, a good little competitive advantage.
It,
My next
yeah,
question
I was
was,
just
yeah, you go ahead.
okay. I was just thing, because it's really important. Banks can be, very, very, used as a weapon. Think about it. Every day of their lives, all they do is value businesses, value situations. The amount of due diligence they do, whether it's for 5 million or whether it's for 500 million, is the same. And so every time that we go in and we buy a business, when I went through and talked to you before about the layers of executives, then the special board committees and the board, then the bank is really, really critical. And so they're my, kind of my sober second thoughts. And everything that I thought I would look at, they probably look at even more things. So we really do have a nice cross section of vetting everything that we've done. And hopefully it all comes into play in a material way for us.
That's really cool. All right. I've got a few questions around like finances of the business or things like that. So but the first question I wanted to ask was, in the future, some free cash flow is going to start pouring in. Um, what would be your priority in how you would spend that sort of free cash flow each year? Like, what would you where do you think your priorities would be?
Well, I mean, I would love to get our debt to EBITDA ratio down to 1 to 1. All
Okay,
right.
cool.
Um, I think that you have to understand that when your bank is your partner, they need to make money too.
Mm.
So I could say, well, let me just get rid of all that debt. But having a bank there as your partner is extremely important because they're going to help you grow your business. And so if you decide to take all that money away and just pay off all your debt, where are you going to have your partner to help you grow? Because everyone has to make money. That's the fundamental aspect of business. And if not for the Bank of Montreal, not any of the businesses would I've been successful with, because I didn't have the tools. I just didn't have the cash flow. I didn't have it. So I think, maybe someday, if it's significant, then why not pay dividends, right,
Yeah.
to the shareholders? That's one way of sharing the wealth. The other is you've got to continue to reinvest in your business, or else you'll have your highs and then you'll gradually sink back to the bottom again. So you have to have, your whole strategy, your vision has to be looked at very thoroughly,
Yeah.
and so stay contemporary, stay ahead of the curve, and reinvest in the business. But if you're making lots of money, like when I was at Altus, we paid dividends,
Okay.
so it was a nice return. Some investors say don't, but I mean everything is an option. All I'm saying is that I'm not the owner. All of us are owners, and so ultimately they'll tell me the right thing to do. I can make suggestions. I'm telling you, if they don't like it, nobody is shy to reach out.
Nice. That's good. We're back to the board. Actually, have you ever had any um, like major disagreements with the board, in like you see it one way, they see it another way, and you have sort of, do you ever clash with the board?
Clash. I don't think I could ever call it a clash. When I was at Altus, I'm going to have great success, as you know, and so I had bought a business called Argus, paid 125 million for it. And I had this great idea that if I had Argus, which is a discounted cash flow analytical software, I could build a platform that basically does mark-to-market valuations on a real-time basis for all the major financial institutions. So they have to value the real estate they own. It has to be done, frequently. So with Argus, with this platform we developed, so lo and behold, that little business I paid 100 million for is now worth $3 billion today, because we did the mark to market. From when I bought that business, I had previously bought a survey business, and the survey business was purchased because it helped me with synergies to do tax valuation title in that area. So what I was going to do is I bought it for around 30 million about 4 years earlier, and had an opportunity to sell it for 100 million, and that was going to pay for Argus. Because I turned that from, kind of 4 million or whatever as profit to 20 million of profit, the board didn't want me to do it. And let's just say that I had a major disagreement with that.
Yeah.
And ultimately, I ended up leaving the company. And we'll call it a mutual, situation, because ultimately when the board thought, that and they had this right. So like I don't dispute that. But when I felt that we had a difference of philosophy on where we should go and what we should do and how we should deal with it, I didn't want to go another $100 million in debt.
Mhm.
Right. It just wasn't what I wanted to do. And so they didn't want to sell the business. So I said, guys, we've done well, good luck. And I went another way. And I've said that in a very quick way, and that didn't happen in a very quick order. But ultimately, I think you have to be true to yourself. And the company went on to just do wonderful things, and I turned out to be right. The survey business that they didn't let me sell, they gave away for nothing.
Right.
Um, go zero. It went to zero.
Crazy.
So, well, I mean, listen, when you're doing surveys, oil and gas has lots of highs and lows, doesn't it?
Sure.
And so, I, had it raised from 4 million to 20 million, thought it did really good, you know, bought it for, I don't know, it was 30 million or whatever it was, went to, had it sold for 100. I was happy, was able to wipe off the debt, and knowing full well that you have cyclicality in it. So I just bought a better business, which proved to be true. And the board didn't have the confidence that, the business I bought was going to be as prolific as what it was. And they also maybe thought that that survey business was going to do a lot better. The board that I had at the time, and remember, I was a lot younger then, so when I put the board together, they weren't necessarily skilled in M&A
Mhm.
and business valuation, but so you have to be really, really comfortable in who you have as a board member. I guess that's the lesson learned.
Yeah.
I'm not. I don't have an embargo on original thoughts. Yes, I'm pretty strong-minded. There's no question about it. But I do believe, in collaboration in a material way. But if it gets to the point, we have to remember, if you're the CEO or you're in charge, and someone has, philosophically a different, view on how it should be run, you got two choices to make. You can go with it and take the chance that it can go down and you're going to be blamed for something you didn't believe in, or you can say, you know what, I think you're wrong. I think it's going another way. This is not going to work for me. Do what you can to make sure the transition is easy and nice, and then move on. That happens from time to time, and sometimes that moving on is not, by choice, right? So, quite frankly, I got a good relationship with our board. Um, really haven't had any material problems with the board. I had a fundamental difference before and I left, and I think that they were happy that I left
Sure.
because I was not happy. I wasn't. I don't think they were happy with that I wasn't just rolling along with it and that. But it's all okay. It's not personal. It's
Yeah.
business, right? And you just got to take care of the shareholders, and that I did. And so I feel very happy about it. Still got good relationships with it, and it's you know uh, you just make decisions, and sometimes sometimes you just have to part for the betterment of everybody, right?
Well said. Um, what do you think about the challenges are going to be in the future for scaling for you guys? Like, where do you see the roadblocks?
Well, let's put it this way: we've done a lot of acquisitions in the last little while,
Mm.
so my view is it's time to take a pause. It's time to maximize your efficiencies and your synergies. It's to build up a bit of a war chest in cash because we don't have enough, right? And so I want to grow the business. We want to be cash flow positive, EBITDA positive, and build up a bit of a war chest, because you do need to have something in the tank on rainy days, right? And so, I'm not saying that we're going to not do another deal in the next year, but it would have to be crazy, stupid good. I really do think that the world wants us to pause and focus on operations and maximize it. And that's what we're going to do for the next, kind of year to 2 years. Just start making money and, getting that share price back to where we want it to be.
Do you think that's the biggest misconception from investors about the company?
Well, listen, it all depends, on philosophy, right? If I can make 1 and 1 equals 3, I'll do it, right? Or you can make 1 equals 3 in 5 years, or you can make 1 equals 3 in 5 months. And a lot depends on your timeline, because sometimes you have opportunities you can't afford to let go. And sometimes people just feel they just want to build it on their own. And once I got $100 in the bank, I'll buy, that business with $100. And so, maybe the second and third generation have the opportunity, of reaping, the benefits of that approach. But in public companies, I think you have to take the opportunity that when you have something to make your company better and you can facilitate that and you have been responsible in every way, that's what you should do. And I think that the perception is now is that I've been, not me, but we have been fairly active. So let's just take a breath. Let's, consolidate our talents, and the assets that we have, and let's show the world why we did it and how it's going to proliferate into, good positive cash flows and profitability. So that's kind of what we're focused on over the next, we'll call it 18 to 24 months.
One more for you. Who do you invite to dinner, dead or alive?
Oh, well, obviously my dad, right? I mean, that goes with saying. He's not alive now, but that's something very, very special. I focus not on public, leaders, but on private leaders. There's a whole different mentality there, and they living by, through their own volition. And so I have a tremendous interest in people and what they've done and how they built their business. And so, business leaders that are still, in the private sector. I love sports though too. So, anyone, whether it's hockey or baseball or pretty much every sport. I mean, I even used to come to Sydney every year and watch the sevens and the rugby matches. And so obviously, rugby is a very prolific sport in Australia along with tennis. So, obviously, there's everyone in the world. I used to go to, I was a member of Prince Edward's Charitable Foundation. So I used to sit down every year at Windsor Castle, Buckingham Palace with Prince Edward and Prince Philip, along with, probably another, 75 people. It wasn't always one-on-one, but I always had chats with them one-on-one. And so that was exhilarating for me because what I found is, and Prince Philip said this to me once. He says, "Don't ask me about me. I want to talk about you. I've just been a civil servant my whole life. I want to know how you built your business." And so it's just interesting chats. I mean, life is, you hear places that you visit, through song. And, you remember hearing a song by Rod Stewart and talking about Berkeley Square. And lo and behold, I became a member of Annabelle's right across the street from Berkeley Square. So, it's life is a journey, and you gotta enjoy every minute of it. Not every day is full of bouquet of roses, but it's how you handle yourself with a little bit of class and dignity, and and ultimately, you have what you have.
Appreciate everything, Gary. Thanks for your time, and look, just keep doing what you're doing. I don't think that would be the only thing from the outside looking in is the share price is volatile. Investors are going to cry for certain reasons all the time. You just keep doing what you're doing, and the business will be successful, and that's what will matter.
Yeah, trying to do our best, but listen, I can't thank you enough for your interest. I mean, from thousands of miles away,
Yeah.
it's nice to know of interest, and so very much appreciate your time. Be accessible to you and your listeners anytime you want. But thanks for having me.